The government shutdown is over after more than 40 days. Finally, earlier this week, Trump signed the bill and therefore the government shutdown is over and therefore a lot of liquidity is back in the markets and that might bring alt season. And in this video, I'm going to explain why this is important and what impact we can see in the markets. Before we continue, I'd like to ask you for a favor to subscribe to this YouTube channel. I know that it's not the best period, it's not a great period to hold altcoins, but still, if you're watching, thank you very much. You are one of the warriors that are sustaining during bad times in the market. So congratulations for that. Better times are ahead of us, but make sure to subscribe to this YouTube channel. Earlier this week, we've also recorded 2 new podcast episodes for New Era Finance in the studio here. And we're going to continue doing that. We are likely going to travel to Dubai to do some more in-person podcast episodes. And we want to continue doing that. But in order to do that, we need you to become part of the community. As then, if you become a subscriber, we can continue to grow the channel and get even better guests join us at New Era Finance. So do me a favor and become part of the community. Now, if we look at the big important events of this week, we generally need to look at the government shutdown. Earlier in the week, as I said, Trump has signed the bill. The government shutdown is over after more than 40 days, which is one of the longest government shutdowns that we have ever seen. It's finally back open, which means that government employees are back on track. They can go back to their work. They will get paid again. And there's also a very good case the markets are going to bring back liquidity. And therefore, that we're going to be getting a better market circumstance. Because since the moment that we had the government shutdown, Bitcoin tried to break through the all-time high and got slammed back, in which we crashed all the way from there. So in 40 days, Bitcoin went from 125K all the way to sub 100K. And in between, we had a big crash taking place on October the 10th. And we have also seen a terrible start for the month of November. So we kind of can see that there's been less liquidity in the markets. But the flip side is that in the same period, we have seen gold doing absolutely great. It has been going off in the sense that it ran by more than 50% in the same period that Bitcoin dropped. And that is interesting because that shows that risk off was the right strategy and panic was also the right strategy during that period, in which we've also seen a lot of hype going into gold as an asset. Therefore, we see a lot of people expecting gold to do another double, which is kind of ridiculous. But the pendulum is likely going to swing more into the direction of risk on appetite instead of risk off. And there are 2 arguments for this. The first one is simply using math, which is using mathematically assumptions or just risk appetite. We can see what the charts are telling us. And most of the altcoins are extremely undervalued and have a big gap between the weekly MA and the current price. While on the other hand, we can see that gold is extremely overvalued if we look at the fair price or the mean price, which is used by those moving averages. Especially if you look at the yearly chart. The yearly chart is currently at 4.3K. It's up 61% in a year, while the yearly 20 MA, which is not the best indicator, but when there is a big gap, then it is an important and relevant indicator. And in that sense, the 20 MA, the yearly one, is currently at 1.6K, which means that the current price of gold is nearly tripled of the mean price based on the yearly chart. If we go to the quarterly, if we go to the monthly, if we go to the weekly, we can all see the same. And we can also see that the returns have been more than positive for gold. 14% 2 years ago, 27% last year, and 61% in this year. If you think about that and you use all the data that we have of gold, then this these 3 years after each other has an occurrence of less than 0.2% to happen. So that in itself is also what investors are going to be using. Because if that is such an unlikely event to happen, then the risk of buying an asset like gold at this point is substantially higher compared to what the reward could be, because we are overextended to the upside. In practical terms, or in mathematical terms, you would say we are an X amount of sigma, and sigma is the standard volatility that you can see. In this case, it's such a rare occurrence, as I said. So in that way, we are also going to see a pendulum happening in gold in itself. The amount of sell pressure is going to increase, the amount of buy pressure is going to decrease. While on the other hand, if we have the digital gold thesis, and if we know that Bitcoin is following the path of gold, then in the past year, Bitcoin hasn't been doing anything. And as a result, it's down since November 2024. So there will be a lot of investors that are going to be saying, hey, I've made a return in gold, but perhaps Bitcoin has a better thesis, or at least for the coming year, it's more likely to see an upwards move in Bitcoin than in gold. And that's where the pendulum starts to swing. And by that transition, we will likely see more liquidity flow into the entire crypto ecosystem. So that's a positive ingredient for markets to move. And the second thing is the fundamental standpoint. By the fact that the government shutdown is currently over, we are first of all going to get a lot of macroeconomic data, which can be positive and can be negative. I mean, if everything is going to be exactly what Jerome Powell wants it to be, we are likely not going to have a rate cut in December. But more importantly, the Clarity Act can be voted on. So finally, we can start reopening the process of finalizing the Clarity Act. And everything that we've seen on institutional plays over the past year has been due to the Genius Act, so all the stable coins and all those things. The Clarity Act opens up for blockchain in general and also for DeFi. On top of that, we know that QT is going to stop at the 1st of December. There is still a chance of a rate cut. And it's the entire playing field is changing at this point, in which we are likely going to get a better macroeconomic playing field. So these two combined could be the start of alt season. And that's why I have the charts here. And in those charts, we will be seeing what crucial levels Bitcoin and ETH need to break through in order to have such an alt season. We are about to see the altcoin bull market and better market times, and that is the perfect time to change your exchange. And the reason why is that if you're paying fees, you want to have the lowest fees, and OKX is giving you that. And therefore, OKX has just announced the transfer days, which is a limited campaign for all Dutch users to move their assets to OKX, and you can get rewarded by up to €1,000. What do you need to do? Well, first of all, you join the campaign with the link in the description beneath. You transfer or deposit €2,000 or more. You hold the assets by 90 days and you start trading on the exchange. And if you become more active, the rewards will be bigger. And here's why you should be using OKX. I'm using it myself for trading bots and active trading, but it's also the most secure and MiCAR compliant exchange where you have the lowest trading fees and the ability to connect it with the DEX exchanges, which I'm actively using. So make sure to join OKX through our link in the description beneath and to use the transfer days if you are a Dutch user for yourself. The primary question is, what do we need for alt season to happen? And first of all, we need buy pressure, right? But in order to get that, we need to have a reason why people are buying crypto. And to be fair, commodities have been doing great, but overall, the actual reason to be buying Bitcoin and crypto is because it's the only asset class that's going to provide a return. And then if the Clarity Act comes through, then we're also willing to see more money flowing into the markets because all those protocols will be expanded. But if we look at the charts, then the first thing that we need to look at is, again, a chart of TechDev, but he's showing us the business cycle, and it's a reference in these blue lines that we see here. We have the green dot, the yellow dot, and the red dot. The red dot is the end of the parabolic phase. Technically, that's also where the business cycle is mass expanding. It's usually also a period where luxury goods like watches are peaking. The green dot is where there is a recession or at least a bad market. And in a sense, we had the COVID crash here. We are also currently under the valuations or in a weaker business cycle than during the COVID crash. And that in itself signals that this pre-parabolic phase has been way longer than the previous ones, so that the upcoming parabolic phase is likely going to be longer as well. And then after the parabolic phase, we're going to have a bear case. But all in all, the actual move hasn't really happened. Now, if we look at the higher time frames for Bitcoin, we can see that we are nicely moving along with the 20-week MA. So we have been using that as our narrative, which means that every time when we are beneath it, it's a great period to start accumulating your position. And in this case, the current price action is quite comparable to what we've seen in the summer of 2024. A long extended period of sideways price action where we are constantly taking the lows here, right? So what do we need to see when we're looking at the lower time frames? Well, essentially, we have been having a retest here at 107.5 that rejected. So there are two ways of actually generating the breakout. First of all, if we drop beneath 99 again and we take the liquidity there, which I think is unlikely, but it is the structure and the trend on the lower time frame is still down. If that is taken and we go back up and reclaim 101, that is a signal that we are likely going to get enough buying pressure to go to the second phase, which is, as you can see here, the 107K rejection, which is kind of with this entire block here. That needs to break. And when that breaks, we're going to take the liquidity here, go into this gap, and that's when we start getting into a new all-time high. So we need to see a bottom on Bitcoin. We need to see it break 107 to 109K. And that is quite likely the period where Ethereum is going to outperform. Because if we look at Ethereum, it is also beneath the 20-week MA. It has been happening quite a lot. But if we're looking at Ethereum versus Bitcoin, then it's currently doing a crucial higher time frame retest here. We've had a big breakout above the 20-week MA. It ran from 0.025 Bitcoin to 4.3. And then after such a big impulse move, which is also an outlier in comparison to the regular volatility, comparable to gold, it comes back to the mean price, and it's currently around the mean price. And we've seen two occasions that we dropped a little bit more and it got quickly bought up. So it's an indication of buying pressure into this particular asset, which means that in this area between 0.03 to 0.033, that is actually the area to accumulate your position. And this is likely going to change in the coming few weeks when Bitcoin is going to break some crucial levels, and then Ethereum is likely going to outperform. And the same can be seen on things like Chainlink. It is still accumulating here. We are still around the 20-week MA, but if we look at the monthly chart, then we can conclude that we are looking for a potential break of trend, which means we have lower highs, higher lows, and the trend remains to be a little bit upwards here. But if this monthly is going to close above the monthly 20 MA, we are likely going to get into a final run of this year, but at least into the first start of the bull run, which is Q4 2016, Q3 2016, when we started to have some moves, or at the second phase of 2020 when altcoins also started to make some movements. Not yet the vertical phase, but at least we start to trend upwards, and that is going to bring more sentiment into the market. So what do we need? Bitcoin needs to bottom, Bitcoin needs to break 107, gold needs to stagnate, and then altcoins are going to outperform. First is going to be ETH, it's finding a bottom, it starts to show strength, and then the blue caps will follow. The conclusion is for me that we are still at the start of a bull cycle, and I think we were actually going to start it already, but the government shutdown came in between. It's still a risk off appetite, and we're slowly changing that. So I keep repeating that we are going to get into a stronger bull cycle into 2026 and 2027. And I think that at this point in time, We are likely going to reverse the trend upwards in the coming weeks, and I think altcoins are going to outperform. Thanks for watching. I'll see you again next week. Make sure to subscribe. Ciao.